Hey guys, welcome back to the channel. With the recent dip on Bitcoin and cryptocurrencies, I thought it was a great idea to put together a video on worst trading mistakes for crypto and stock investing. Now this applies to crypto and stocks because essentially you are trying to invest your money to make more. So it's the same thing, it's the same human emotions, and we can apply the same strategies across both markets. I obviously found out the hard way, and that happened in property as well. So I'll cover a little bit about my background in this video in case you were wondering. Now I've got about 13 mistakes. It's not limited to these. You can make plenty of mistakes, but I thought this was a good start to at least check off your plan, check off the system to make sure that you hopefully don't make these mistakes time and time again. So we'll get stuck into that. But first, hit the like button, subscribe to the channel if you find some value from it, bell notification icon, and all of the links in this video are in the description down below. Don't be clicking on scammer stuff in the comments. One quick mention again, this will apply to any crash that happens. So this is a timeless video. If you need to have some reminders, come back to this video, save it in a YouTube playlist or any other sort of playlist that you have so you can come back and review all of these mistakes so that you can improve on them in the future. So how I got started in the markets, I saved while I was in school. I wanted to buy property. I started property just about 15 years ago. I was around 2006. I invested, I bought and sold, I developed, I bought tops of markets on high leverage and lost hundreds of thousands of dollars. Fortunately, I'm still here to tell the story. I started trading 11 years ago and I traded traditional markets, stocks, futures, and now of course, cryptocurrency. And I love cryptocurrency because there is no leverage, or there is leverage, but you don't have to use leverage to make big returns, similar to penny stocks. The asymmetric risk is there. So that's why I like these. And the way to make more money from it is not screwing up and making some of these really simple mistakes that you can easily prevent just with a plan, which is our first strategy here. So like I said, I've made all these mistakes and they're very common mistakes to make. So don't feel bad if you make these mistakes. I still make these mistakes time and time again, but they happen less frequently. And even some of the best traders and investors in the world still make these mistakes. If you think back to 2020, Warren Buffett buying into airlines, bought far too much of a position, needed to get out of that position and lost about 5 billion on the trade. Now, of course, 5 billion is not much in his entire portfolio, but at the same time, it was a trade that a very experienced investor made and quickly recovered from. And he has learned, obviously, from his 60 plus years of investing. A trip down memory lane, this is one of the properties that I helped develop in Brisbane. It's just in inner city of Brisbane. It was a 5 townhouse complex. This thing worked out well, but there were many mistakes that I had in this project. I didn't follow up with the project managers. They took their time. They started costing me money every single day because of how slack they were. The building company went bust and we had to find a new builder. Fortunately, the market was going up, so that saved us some money as well. And that's what I find now in cryptocurrency. The market is going up, so people are still they could get wrecked, but then they're still going to survive, provided they have some rules in play and they take action. So this all worked out in the end, fortunately. But some other ones, not so much. Buying tops of the market, highly leveraged, in mining towns, so very illiquid, that sort of stuff gets you busted. So that leads me over to the first thing, and that is not having a plan. So define your goals around targets, around price, time. Essentially, how much time do you want to have in a market? What sort of prices do you want to get in and out of? What goals are you literally looking for in the market? Like, how much do you want to make? Now, these aren't set in stone goals, but they give you some sort of idea of where you want to hit, basically a target to aim for, so that when you're in a trade and you're up 10x, 50x, whatever it may be, you have a period or a time point that you can get out. Decide whether you want to look at technicals or fundamentals, a combination of both, and start to study that in particular, whichever one it is, in more detail so that you can become an expert in that field. You don't want to be a jack of all trades because then your time is spread very thinly across many different sectors and you just don't get the same results spreading everything thin, especially when you're new to the market and you're trying to learn everything about investing plus everything about the projects. There's just not enough time in the day to do this. So get really good at one or two things, do those really well. Maybe that's even just fundamentals on Ethereum or technicals on Bitcoin, and just know those really well. You are almost guaranteed to do better in the long term and short term if you just focus on those few little things rather than trying to throw $50, $100 across 50 different projects and hope that one sticks. Speaking of which, decide how many markets you want to trade. That might just be sticking with 5 or 6 cryptocurrencies or 12. I'm just pulling numbers out here, but you've got to stick with something that is going to work for you. This is the problem with a lot of people. They just throw a lot of money into a whole lot of different things. They're listening to YouTubers just like myself online, and they're talking about different projects all of the time because everyone's trying to talk about everything, because everyone's asking about everything, and they start throwing money at a whole lot of different things. Just pick a few, focus on those really heavily, and you'll do very well. This is what I've done, especially with my super fund, which you guys see on Instagram. So go and follow that if you're interested. I've picked 2 cryptocurrencies, Bitcoin and Ethereum, and I just hold for dear life. Hold on for dear life with those 2 cryptos. And as I get more money into my super, I just put that in. That's basically my retirement fund for you guys that are overseas. Where will you keep your records? Make sure you have somewhere to keep your records. That's part of your plan. Maybe it's an Excel spreadsheet, maybe it's a notepad, but just have somewhere where you keep track of your results, because if you don't track your results, you'll never know how well or how bad you're doing so that you can improve. Number 2, and that is being too impatient. People get wrapped up with FUD, FOMO, basically trying to force trades. A lot of emotion gets involved. And when you're too impatient, that throws you from one crypto to the next crypto because it's not moving. Literally just before I turn the camera on to film this, I can read comment after comment, one in particular, someone saying a project hasn't done anything apart from go down. So if you don't have your plan for starters, you don't know what the hell you're doing, you're just buying something that is online, project goes down, then you sell. So you lose money because you don't even know what the hell it is that you're doing or why you're investing in something. And for me, I look at this as just be patient. If you have done your research, you've got your plan, your TA or FA, you've done your research, doesn't matter if the project goes down, because long term you can see it going up for X, Y, Z reasons. And that's just going to give you more ammo when the lows come in to keep buying up the lows. But if you don't have that commitment, then you could just miss a fantastic opportunity. The other thing about being impatient or not impatient enough is forcing a trade. Sometimes it's better to stay out of the market, holding onto your fiat. Yes, it's not going up in value. It's slowly declining in value with the more that they print. But crypto, we know, can dump 80% in a matter of weeks. So if you just sit on the sidelines and wait for that right trade because you've got your plan set up, then that money is possibly better off just in your account and not losing you money in a trade just because you feel like you have to get into the market. You've got to be in it to win it. But at the same time, it's better to time it and just wait for a good time, or be convicted on the trade that you want to make. So don't try and force trades. Be patient. Trading doesn't mean more money, and this is different to a job. So a lot of the time, new people come across into the market here. They're from a traditional job. You might be watching this, you might be at a 9 to 5 or trading your time for money. So the more that you spend in working at something means the more that money you're going to get. This is almost the opposite for trading. Yes, you have to put a lot of time into studying. That's not giving you money straight away. You have to put a lot of time into research. So studying the skills, then researching the projects, or doing your analysis, whether it's technicals. So all of this time, there's a ton of time spent there, but there's still $0. Now, the money part is super quick, making the trade. Hitting buy, setting your stops, setting your alerts for when the profits are, where the profit targets are, and then walking away. That can literally take 2 to 5 minutes, max. And so that is why people get really screwed up. It messes with your head to think that you can just throw some money down. It takes you 5 minutes, walk away, come back in a week, a year, whatever it may be, and the money's gone up. But putting a lot of time into the initial study and research and analysis is pretty much where the money is made. So that is something that's very different from your everyday job where you go to work and you earn per hour and then you come home and switch off. That is something that you really have to get into your head when it comes to investing. So that's number 2. Leads me on to number 3, selling the lows. Selling lows is obviously not such a great